Hello, this is Brian Belsky, Chief Investment Strategist at BMO Capital Markets. We believe U.S. stocks will post their fourth consecutive year of positive returns in 2022, albeit less positive, but that's okay and very normal. Our models show that the S&P 500 index will attain a price objective of 5,300 on earnings of $245. To clarify even further, we believe this less positive trend does not apply only to price performance, but also to less positive earnings growth, diminished valuations, not to mention a slowing trajectory of rising interest rates. And yes, the strong possibility of decelerating inflation, especially during the second half of 2022. Simply stated, double-digit earnings growth, still excessively low interest rates, declining valuations, and eventually subdued inflation are a very good backdrop for equities. Remember, equities are traditionally the best inflation hedge, and yes, stocks can, will, and should go up alongside interest rates. After all, rising bond yields means the economy is improving, which the stock market has already been telling us thanks to its powerful rally the past few years in particular. In terms of positioning, over the next 12 to 18 months, we are advising clients to overweight the following in their equity portfolios: financials, discretionary, industrials, and materials, while equal weighting both growth and value, let alone small, mid, and large cap stocks. However, clients are encouraged to differentiate these positions by increasing their focus on quality, growth at a reasonable price, and dividend growth across all size, styles, and sectors. Taking a bit of a longer term picture, we still believe that U.S. stocks remain in a 20 to 25 year bull market, with the return structure of stocks over the next 3 to 5 years becoming more normalized to the tune of high single digit to low double digit returns, with longer term time horizons led by technology, communication services, discretionary, and financials. To be clear, society has been nothing less than tumultuous the past few years. However, the stock market and investing in general has been exciting to say the least for U.S. investors. But as markets, let alone society itself, begin to normalize and moderate over the next few years as the great unwind of the COVID-19 pandemic ensues, we continue to focus on the positive, because after all, positive is still positive.